Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. Hello everyone, how are you? Welcome to another Tuesday webinar. So today we're going to talk about the VIX and how the VIX we expect the market to predict what's going on. Now, so the VIX is a volatility indicator gauge. So it's actually known as the fear gauge, so an investor's fear gauge. So the idea is people use the VIX to understand whether the market is nice and placid or whether it's a massively volatile market and people shouldn't be trading or unprecedented things happen. So that's what the sort of the VIX stands for. Now we're looking at the VIX and the S&P 500, and what we've seen here is we have this level, this sort of key level that it keeps sort of coming back down to and bouncing off. And what we've seen historically is every time it hits here, it's had a pretty big jump. It's had a pretty big jump, but we got into this little area and we've had a little bit of a lull, and then we had another little jump, and then it's come back down here. So the question is now, is this going to be a little bit of a lull that's coming along here, a sideways movement, or are we now going to see a big jump to the upside on this? And this is something that we have to, as traders, sort of have a look at and take into consideration. Now, if we have a look back historically, have a look at the VIX, it does go a little bit lower, down to around the 10 mark. So we're at 18. So we still have some more downside. So a little bit of settling down still to go. But another thing that is quite interesting here is if I put a sort of a trend line across the top of this here, we're starting to see that these vicious jumps are slowly starting to settle down a little bit. The market seems to be sort of cooling off. Now you can come and have a look at that and have it in two different scenarios. You're going, well, we're eventually going to get a violent jump to the upside, or this is the market actually, the sentiments continue and people are happy with what's going on and it will continue trending. So that's what's going on with the VIX at the minute. So just keep an eye out. This is the volatility fear gauge. Okay, so when it's massively away from this line up here, this means there's huge volatility in the market. It means that the market is going in an unprecedented sort of way, and we want it to revert back to the mean. And as it comes back down here, then the market, the stock market, is running as expected, if that makes sense. So over on to the S&P. So if we look at the S&P here now, we've had a really nice run at this present moment. So we've had a really nice run here. It's had a really nice jump up here, and it's getting close to that level up here. So we get a horizontal and stick it in right there. Let me have a quick zoom out and see what it looks like. Now we're in a decent enough area. That area could be there, or it could be slightly lower, it could be there. So we've a little zone there per se, but I'll put it there because it's the most recent one there. So it's the most recent high, so I'll put it right in there. But we have a little bit of zone between the 4139 and the 4185. So we have 40 bucks there of a zone. Now, one of the things that we generally see when we go up here is we see a rejection. Okay, so there's a high, comes into this area, rejects, comes up again, hits this area, rejects. And yes, we broke that high there. We come into the zone, and look, yes, it hit once, twice, three times, and then rejects. So the question is are we going to see a rejection at that level? Are we going to get a sell-off at that level? Pop that there. Okay, so we have that popping up here, and the question is are we going to get a rejection at that sort of area? Are we going to see a rejection here? And the question is that if we do think it's going to reject, are we waiting on the bar to finish, or should we put a limit order? And then I suppose the final question posed here is where do we take profit if we think that? So this one here is a 3-to-1. Are we better off getting, say, down to this level here? So our take profit just inside there, inside that level, and that'll be 1.23 to 1 if that trade kicks off, if that does exactly what we expect to happen here. Now, also there's other factors involved here. If we look at the S&P, it is coming up into a nice level. It is coming up to an area where we could potentially take a limit order short. But if I look at the Nasdaq is actually making higher highs. So there's a double top. It rejected. It went down to a 1.67 to 1 and actually went down a little bit further, almost to a 2 to 1, and then it broke through. Okay, and this particular scenario, we have that level. Look, 1, 2, 3, 4, 5, and if it comes back to here, are we now buying that? If we expect this to continue going, there's a high probability that the S&P will follow. So then we have to work out, is that going to continue? Now, I'm just going to go over into the Dow so we can actually have a look at the Dow. The Dow has taken out that high as well, but the Dow seems to be quite lagged compared to the S&P and the Nasdaq. So till that gets up to here, that is not in a trading range as of yet. It has to get up to here for us to be looking at that at something that we could potentially trade around there. So again, we're looking at the S&P, we're looking at a potential trade there short, or the Nasdaq potentially long. So we actually have a disagreement, a divergence here. We have the two of them disagreeing. We're not sure what's going to happen. So something that has also happened that will have a huge bearing on this is oil. So we can see that oil has had a massive jump yesterday, or on Monday it gapped up, didn't it? Now we are back up to this level that we've seen, the $81, and the $81 has hit it once, twice, 3, 4, 5, 6, 7, 8. It is now touching it 9 times. And the question is at this particular point, are we going to get a short, or is there just too much upward momentum here? We have OPEC after cutting back on 1.1 million barrels of oil. We have Saudis cut back, we have Russia cut back, trying to drive the price of oil up. Now, if the price of this goes up, what knock-on effects will this have? This will have companies who are struggling with their profit margin. We have companies already struggling with profit margin. It's a time where consumers have less money to spend. If oil continues to go up, it means then that consumers have less money to spend, which means then they haven't got it to spend on the products, on the companies. Secondly, then the operation costs of those companies will get higher, which means it eats into their profit margin, which means then each quarter the earnings that they're going to make or not make is going to be either a hit or a miss, which means then we'll have a knock-on effect on the actual stock market. So to go back and have a look at this, now this is quite bullish, it's come up to here, but once we had the likes of oil getting stronger on these markets, we actually had a pretty big sell-off on the likes of these once oil got massively stronger. So it'll be interesting to see when it gets up into these areas, will we have a reaction from the market because the price of oil has got so expensive? Will that have a knock-on effect on the stock market? So, and I think it will. It comes to a point where once this sell-off starts happening, I expect a pretty big one if oil continues to grow. So if oil breaks through this level and then continues, the next decent level is up here somewhere, okay? So the next decent level is up around here, is right there. Now historically, yes, there are levels back over here. Historically, there is some levels back over there, but it's not, they're not as important, so that's why that level was there, so here. But if we break through that, we do have a nice little run to go. We do have a nice little momentum to the upside. Yes, we have softer levels here off that there, break and retest, but you'd expect this to continue up to around here, the $92 or $93 mark. So it's a very interesting time for both markets. One, for the price of oil, and two, for the likes of the Nasdaq, the S&P, and the Dow. So the Nasdaq, we needed to retrace back to this level, and if it comes back to this or this one, we have a potential long. S&P, we need to go up a little bit higher for our short, okay? And then we have the likes of oil, which we have a scenario here where we could have a potential short position here. There is a limit order to the downside here on this particular one. So if I look at this one, a short position, I would use that bar. So see the red bar? I would use that as a point of reference. I'd have my take profit inside there if we're going to reverse. And let me stick in an indicator. Let me see if there's any divergence here. So I'm going to put in stochastic to see have we got any divergence on this, to give me any indication that this should be coming down. So what I want to see is this as a double top, but I want to see this one down here massively. I want to see the disagreement coming down here, and I don't have that disagreement. So that tells me that there's not a huge drop off in volume here. Okay, so for me, then this is not a short. This is not something that jumps at me. For a reversal like this, I need three sort of rules. I need one, I need a horizontal level of support and resistance, and we have that. We have a hard level, 1, 2, 3, 4, 5. This is the 6th touch. So we have an extremely hard level there that traders are trading off of. 2, I need price action. Okay, I need nice price action. And have I got nice price action here? No, I don't. I don't have nice price action. I have a big bar, and then I have an inside bar. I can't use this inside bar because it's live, it's open. So this is not a nice bar. I want to see the body at the bottom, 1/3 of this bar, and I'd like to see that bar a little bit smaller. The ideal bar is this one here. See this one? That's the ideal bar over there. That's the ideal bar that I want. And then 3, I need divergence. So I'm missing 2 out of the 3 rules here. So for me, this is not something that I would take, even though there is a trade there. Also, there is a little bit of momentum to the upside. So ideally, I would like this to break and retest. I'd like that to go up, retest here, and then I'll be looking at that as a long. Okay, everyone, it's been an absolute pleasure. Any questions, don't hesitate to reach out to me. Don't hesitate to jump in a Discord. I have a trading floor in Mayfair. You can literally come in, walk into the trading floor. It's 105 Piccadilly. You're more than welcome to come in. Just ask for my name, and then we can sit down and we can go through some stuff together. Thank you very much. Have a lovely day. Bye bye.